We are all welcome back. I hope you guys have a good trading week, right? You guys have a good trading week, right?
Yes.
All right,
Yes, sir.
all right, so I appreciate God for that. This is good, and I'm going to like analyze it from the start my turbulent analysis from the higher time frame bias, right? So this is the daily time frame. This is the daily time frame. We have this internal break of structure. So this is internal break of structure. We have this internal break of structure to the upside, right? This is uh, this is the other block, right? That causes this move to the upside, right? We also have this break of structure to the upside, this internal break of structure to the upside. But we can summarize this internal break of structure by using this break of structure to the upside, right? So we can summarize that. We also have this break of structure to the upside at the spot. So we have this break of structure to the upside at this spot, right? And this this is going to be the other block that causes the break of structure, right? And we also have this break of structure to the upside. Since we have this break of structure to the upside, so price is happening for the other block that causes the break of structure, right? So price is happening for the other block that causes the break of structure. But I want us to like move to the recent price movement, right? So let's move to the recent price movement. Well, let's know what price is finding something, all right? So we have this internal break of structure at the spot. This is the other block that causes the internal break of structure. This is the other block that causes this internal break of structure at the spot. So I want us to move to the 4 hour time frame, right? So in our 4 hour time frame, also want us to like make sure to align everything that we saw in the higher time frame by us, all right? So we have this break of structure to the upside. I'm going to mark out this other block. I'm going to mark out this other block as the break of structure, which causes the internal break of structure, right? So I'm going to mark out that other block. Let's move to our 2 hours time frame. All right, in our 2 hour time frame, we can see that the price is like bullish, right? We have a bullish trend. We have a bullish trend. So, but the market is like currently raging at the spot, all right? So the market is like currently raging at that spot. So we have a bullish trend. So let's do the 1 hour time frame. All right, in our 1 hour time frame, we also have this break of structure. I'm going to align this as break of structure. I'm going to align this other block where. So here is going to be the liquidity. All right, trend line liquidity. Here is going to be liquidity. So here is going to be liquidity, right? So in our 14-5 minute time frame, we're also going to like we're also going to align the other block in our 45-minute time frame. So right, this is the other block in our 45-minute time frame, and also in our 30-minute time frame. We're also going to align that other block in our 30-minute time frame. Right. Let me just try to zoom out and let's align the other block together. All right. So let's align the other block together. This is going to be the other block, and in our 15-minute time frame. So I want us to also add up together in our 15-minute time frame. Right, this is going to be the other block, and we are going to wait for price at that spot. All right, so that is just like the good way to wait for price at that spot, unless price shows a good move, right? So once we have a clear move, we can buy, but to wait for price at that spot is a good place, right? So we are going to use it as trend line. We are going to use it as trend line liquidity. So we are going to use it as trend line liquidity. All right. For if you want to buy, you are going to buy at the spot. So this is a good place to like buy gold at the spot. This is just a good place to buy gold at the spot. Then our point TP is going to be at the point of reversal. But before the point of reversal, we are trying our best like to be trailing our movements. All right. To be trailing our movement. Now, I just want us to also look something much is more. You know that we have this break of structure to the outside, but I'm not I'm faced with this break of structure to the outside. but this we have this gap though, so price will return to that gap and take the trade, right? So price will surely return to that gap. So it's also like, for me personally, I'm going to like, I'll be more comfortable to take buy from here unless I saw what the market is like currently doing, right? So to taking a trade for here is going to be it's going to be like I'm just gambling in market. So right, I don't love here, but since we have this gap here, if I want to use this other block at this spot, price will react from this other block at this spot, right? So we can have price react from this other block at this spot, this other block at this spot, right? So see how price reacts. Unless you want to take trade from here, you're going to trade with caution at the spot. All right. What I'm trying to say is this: you're going to trade with confirmation on this other block. All right. So if price could give you a change of character on a longer time frame. So when you're finding change of character, try to use the 3 minutes change of character so that the chart won't be noisy in the 1 minute character. All right. So and also once we look at the higher time frame bias, like let's look at the 1 hour. Let me show you something. All right. If you look at the 1 hour, you know that here this other block which is sitting here is the best place to look for a buy. All right, this other block which is sitting here is the best place to look for a buy. Then you're going to use this other block as liquidity, trendline liquidity for price to take at this spot. All right, so trendline liquidity for the best place to buy, use this other block because the 1 hour time frame even summarizes it more. Cool. So right, so we are going to wait for it at this spot. All right, so we are going to wait for it at this spot. So I want us to like go to the 15-minute time frame and look at what a current market is like trying to say at this spot. So I want us to like go to the 15-minute time frame. All right. All right, in the 15-minute time frame, you can see that we are having a little bit movement, right? So we are having this movement. It's just like, if you're in my mentorship program, I always explain this, right? Some people will say this is a consolidation market, right? Right? This is a consolidation. But I also explain things about this type of market, right? So the trend could be moving. The trend could be moving on an uptrend direction, right? And also be consolidating at the spot. And the trend could be moving down a downtrend direction and also be consolidating at the spot. All right. Also the trend could be giving us a sideways movement, right? Sideways movement or range market movement, right? This the market could be giving up, right? And also make an emphasis that there are some range markets which is tradable, all right? If the market is giving direction, there are some range markets which is tradable, and there are some range markets which is not tradable, right? These are something you really need to understand. So at this point, this market, this range market going in here is tradable. It's tradable, but you really need to work at caution, right? So I think before the market closed on Friday, this move before that here, I got this move here, but I'm not comfortable at the spot to take a buy to the upside. All right, I'm not comfortable at this spot to take a buy to the upside. Even though I'll take a buy to the upside, I have to look at the risk reward ratio. My TP, I'm going to like take TP from here, right? Because this is the next liquidity on which price is currently targeting at that spot. All right, so my other block, I'm going to enter from the other block. Let me see. Can you see? The trade is just one risk reward ratio, which is very poor. I don't know it. All right. So that is something you really need to look at trading. You really need to look at bad trade, not just you saw a nice setup. No, that's how trading works. Once you have a nice setup, you look at the risk reward ratio. Is it good for you before you take that trade? And you look at your stop loss. This is something you really need to look at. Can you see how price clear out liquidity? So many people are looking spots. Can you see how price clear out liquidity, right? Can you see this candle? Price wipe out more funds. Price wipe out more funds at the spot, right? Price wipe out more funds at the spot. Now, this is something you really need to know. You need to know it's going to like help you a lot. Now, pertaining to the prediction, pertaining to my own take on on gold, if I want to look for a buy, let me say just a buy at this point, I'm going to take it here. But I know the market would probably the market won't return at this spot, right? The market won't return at this spot probably, but now we need to wait for the move, all right? We need to wait for the move. What I'm trying to say is this: first, we need to allow the market to take out liquidity at this spot. So I know we have this break structure to the downside, but sometimes this break structure is going to be as inducement level. Structure to the downside is going to be inducement. So, oh, since we have this break of structure to the downside, I'm going to take it from this other block because it has imbalances, liquidity intact or things intact. So I'm not going to tell you that price won't show here, but for me personally, this is not enough evidence. For me personally, this is not enough evidence for me to take a sell position at this spot because I may get stopped out from this market, right? But the market can also give us this move to the downside. I'm not going to lie about it, right? So the market is going to also give us a down move to the downside at this spot, all right? But for me, I don't know, since the whole direction is telling me it's a buy, right? But price take out liquidity at the spot. So price take out liquidity at the spot. Now, this is something I need you to understand. This is something I need you to understand. First, once you, if the market could hit a move to the downside at the spot and give us another break or structure to the downside, that means you are positioning for a sell setup. We should position for a sell setup, find the other block that causes the break or structure to the downside, place order from there and take it to the downside, right? So this is something that we really need to do. But now, personally, I will not advise you to sell if the market hasn't give you a direction. So we need a direction to the market. We need the market to give us a direction, and once the market gives us a direction, we'll follow it. Or the market could do this, all right? So since the market has taken out liquidity at the spot, this is how the market behaves. Since the market has taken out buy liquidity at the spot, all right, the market could take out sell liquidity because I know there are some people which are looking for a sell at this spot. So I said at this spot, the market could return, take out liquidity, give us a shot, move it to the upside. All right. So this you really need for the market to give you a directional movement at the spot is very, very, very is very, very important, right? But if you want to look for a buy currency now making a video, we are talking live. So I want us to look for a buy at this spot. But first, before you set that your pending order, we should be assured that price is ready to come down at this spot. But right now, we should wait for the movement. If the market will give us a movement, we take it. If it gives us a movement to the upside to take out liquidity, we find the other block, we move it to the upside. But if it breaks structure to the downside, we find the movement and take a set position and wait from this angle, right? This is just my take on gold. Allow the market to give you a movement because there is no clear movement at this spot. You want to take a buy at this spot, right? Except you want to take a buy at this spot, a buy, all right? This is just a buy. This is just here. We are going to wait for a buy at this spot. We are going to wait for a buy. We are going to wait for a buy at this spot. So this a buy here. So we take it to the upside. But if price no return back here, so you follow the market, wait for a buy at this spot, right? So we wait for a buy. Price to give us return back to here, wait for a buy and move it to the upside. All right, move it to the upside. Here is going to be the trend line liquidity for price to take out liquidity at the spot. We wait for price to return back from here, give us a move to the upside. All right, so this is my take pertaining to gold. Are you guys with me, please? Hello, are you guys with me?
Yes. I have a question.
All right.
Should we pay attention to the new opening week, like when we see the gap there? Should we pay attention there too?
You mean this opening market gap? All right.
Huh?
So you mean this gap here, this opening
Yeah,
market gap here, right?
yes, the opening market, yes.
All right. Sometimes you really need to pay attention on it. Not sometimes you really need to pay attention on it because we want price to return back to that gap and feed that gap. Right? You need to pay attention on it. But I'm not going to take a trade from there. So I'm not going to take a trade from this other block, reaching near the opening market gap. Right? So I'm not going to take the trade from here, right? I'm going to use it as trend liquidity because I also need to give liquidity to the market to take out. But your attention on that market opening gap is very much necessary. Now, okay, the next pair I'm going to analyze is going to be our Great British Pounds versus Japanese yen, GBP, JPY. So I'm going to analyze it. We're going to start from the daily time frame, right? During the sun setup, I gave out in the group, right? So setup hits and essay, all right? It's not because of analysis is bad. Analysis is okay, but sometimes, as I always say to you guys, you need to work with proper risk management because it's not about we are just speculators in the market, all right? We are just speculators in the market. Me personally, I think before hitting the essay on GPH, baby cheapers, I think on Thursday or Friday, or I think on Thursday, before hitting an essay, I think the market will give me the move because as trying to give me that move, but the sellers were so aggressive. I hit an essay. Well, how to take it like that? This actually works, right? This actually works for you. Now we have this. This is the daily time frame. We have this break of structure to the upside. We also have this other block which is here. All right, we have this other block which is here. It's just a retracement to this 1 day order block, right? Just we are having this retracement to this 1 day order block. Let's move to the 4 hours. All right, so we need to just align everything together. It's very necessary. We have this other block which is currently sitting at S4. So this is the other block. The retracement is here. So we have this blah blah. Let's move to 2 hours time frame. Let's just be aligning the other block, right? Let's just be aligning the other block. We have this other block which is currently sitting at this spot. Let's move to 1 hour time frame. All right, in our 1 hour time frame, we also have just because how the other block is looking, I'm going to use this other block, but this has been mitigated, all right? So that other block is looking not good for me. So, but the 5 minute time frame, all right, for 5 minute time frame, I'm still going to use that other block at that spot. The way the other block is looking, it's not attractive, right? So it's not attractive. So you can see the massive sell, 30-minute time frame. I'm still going to use the other block and 15-minute time frame. All right, in the 15-minute time frame, I'm going to use this other block at this spot. But first, I want us to understand the cost of the sell, right? Let's understand why the market is like selling, right? Because this is where I'm talking about. Let's just put this as spending. If we want to look for a buy, we'll try our possible best to look for a buy at this spot, but with confirmation. We are looking for a buy at this spot with confirmation, right? So now at this spot, we have, let me just bring this break of structure to this. We have this break of structure, right? So we have this break of structure. So let me zoom in. So this is where I'm looking for a buy at the spot on this spot. everything is intact, but I just price just gave me a move, just dish me a little move to the upside. I wish I could like move from break even, but I thought that price will continue moving to the upside. But before you know, price the sellers break everything after the buyers is trying to push the price to the upside, right? So maybe this week we'll be looking for a buy. We'll be looking for a buy at this point. Now, I just want us to look at everything, what is happening at this market. So we have what we call market structure shift at this spot, right? We have this market structure shift at this spot. We also break or structure to the downside. We have this break or structure to the downside. We also have this break or structure to the downside. This is a break or structure to the downside. Can you see how the market has changed trend, right? So from an uptrend to a downtrend, right? So all we just need to look for right now is just a sell to the downside. Can you see how price neglects this other block? So price reacted from this other block or this spot. So all right. So I think price reacted from the other block. Yes, price reacted from the other block, and this shows a writers a little move to the upside. Right, let me just zoom in. Now, okay. Pertaining to GPP, JPY, I saw a set setup on Friday, which one take this set setup before this move to the downside of this spot. All right, but price, this is the order which I marked the last consolidation candle. This is the last consolidation candle at this spot. So this, I want price to return back at this spot to give me a sell, right? Take profit is going to be at this point of liquidity, but price did not return back to that. Price did not tap me in from this other block. All right, that's what you're going to also say. This other block still valid? Yeah, the other block is still valid at this spot, and that's why we are working with setup. All right, we are going to look for a sell at this spot. So this other block is going to be intact. This other block is going to be liquidity. One price to take out liquidity from this other block. So once the market open, we need a move to the upside before a sell, right? So we need the market to give us a move to the upside before a sell. So this is a sell setup. We need the market to return back here and give us a sell to the downside, right? So we look for a sell at this spot. Then stop loss is going to be at this above this size. So our stop loss is going to be here, right? Stop loss is going to be here. Those 23 pips away. This is going to be our stop loss. So we are looking for a sell. We are looking for a sell. We have this break or structure to the downside. This is a break or structure to the downside. This break or structure to the downside, right? So we need a sell at this spot. We need the market to give us a sell. So we need the market to return back to this other block and take out liquidity from here, give us a move to the downside, right? So this is going to be the analysis on this particular pair. So we need the market to give us a move, all right? So you can be like nurturing your trade, and also you can be like nurturing your trade. Me personally, if I want to look for a buy, I'm going to look for a buy at this spot, all right, with confirmation. I'm going to look for a buy at this spot with confirmation. But before the buy, we want a sell, right? We are going to sell. Let's sell before the buy. We cannot just wait for the buy. Let's sell and get to that spot, all right? We need price to return back from this here and move to the downside, right? We still have a fair value gap which is intact. So price do not cover the fair value gap. So let me just mark it for you guys. Our confluence is intact at this point, right? So let me remove this. We still have a little fair value gap which we want price to return. This is a fair value gap. It has to return back to that fair value gap, cover the fair value gap we use here. And if you can see, we also have a fair value gap at this spot, but this fair value gap is going to be used as liquidity, right? We have a fair value gap, a little fair value gap at this spot, all right? We have a little, just a little fair value gap. All right, so just a little fair value gap at this spot. But that fair value gap is going to be liquidity. This other block is going to be liquidity. We need price to take out liquidity from other block, tap us from this other block and move price to the downside, right? So we need that. So this is a setup this particular pair. All right, so the next analysis I'm going to look about is I think I'm going to talk about, all right, I think I'm going to talk about US 30. Let's look at US 30. Let's look at US 30. All right, so pertaining to this pair US 30, I don't actually like the movement. I actually love the movement of US 30, but you should also trade with caution, all right? So the movement is just leaving another block. So once you return back to another block is to take out liquidity. All right, so this is the daily time frame. I'm going to start my analysis from the daily time frame. This is US 30. So we have this break or structure to the upside. You know, Drew, after this break or structure to the upside, we have this other block which is sitting here. This is the other block that causes the break or structure to the upside. But in our daily time frame, something is like currently going at this point. All right. So we have this consolidation here, this consolidation movement at that spot. This means our price is like carrying out liquidity. So let's move to the 4 hour time frame. All right, let me just remove this stuff. All right, in the 4 hour time frame, when you have this break or structure to the upside in the 4 hour time frame, the 4 hour time frame is like telling us to like wait for it here, to wait for it here. This is what the 4 hour time frame is telling us. All here is liquidity, right? All here is liquidity. Should the 4 hour time frame is telling us to wait for it here to take a long to the upside, right? This is what the 4 hour time frame is telling us to take a long to the upside. All right, but I want us to like also refine this to our higher time frame bias. All right, I want us to like move to our time frame. Let's know what is like what our 12 time frame is saying. All right, in our 12 time frame, let's look at the recent break of structure. Let's look at the recent structure. So we have this internal break of structure, right? Internal break of structure. I'm going to use this other block. I'm going to use this other block. Let's move to our 1 hour time frame. All right, in our time frame, also I'm going to refine this at this spot. All right, I'm going to refine it at this spot. All right, so let's move to our 45-minute time frame. So our 45-minute time frame, I'm also going to refine it at this spot. 30-minute time frame, I'm still going to use this other block, which is going to price it here. Right, 15-minute time frame. All right, now I'm looking something much interesting is happening here. All right, so actually this is going to be the order blocks. Can you see all these candles here? All these candles here are the order block, which all these candles take here are the order block. All this move here is the order block that causes this break or structure to the upside. All right, so I'm not going to mark out this order block, because I look at it as inducement order block. This is inducement order block. Price to clear at liquidity at this spot. So price could also return back to this order block, which is here, and this shows a move to the upside. But no, I don't like the movement. All right, me personally, if I want to look for a buy, I'm going to take a buy at this spot. So we have this move, price neglected. We have this order block which is currently like sitting here at this spot. So price neglected a move here, all right? Price neg move here. So I'm more comfortable to take the buy at this spot. I'm more comfortable to take the buy at the spot. I'll use this order block to take the buy at the spot. You remember what I say, right? So this candlestick here, all this candlestick you are seeing here is the order block that causes this break or structure. This break or structure you are seeing, they are the other block that causes the break or structure. I need you to forget about this. This is what happens to me in the market, and before you know, I got stopped out in the market. All right, so we have this break or structure to the upside. I know we have the break or structure to the upside. Now, I want to ask you just a simple question. You really need to understand. We are not chasing the market. Now, let me say you took a buy at this spot. Where is it going to be the let me say a swing low to put your stop loss? All right. So are you going to, like, for instance, let me say I want to like take a buy at this spot. Sorry, I want to like take a buy at this spot from this other block. I want to take a buy. All right. My stop loss is going to be here. I want to ask you this. I want to tell you this. This here is just a trend line liquidity. Here is a trend line liquidity. This block you are seeing here is a trend line liquidity. So it's a trend line liquidity. We need price to take out this liquidity at this point. We need price to take out this liquidity. It's called trend line liquidity. It's called trend line liquidity, right? So forget this stuff which is here. So you say, oh, I have this liquidity which is currently like sitting here, right? This is a liquidity. So we need price to return back to this liquidity and to the upside. I'm not going to tell you that price can't return back here, and this shows a move to the upside, right? Price could return back here and this shows a move to the upside. But first, let's you want to raise it, all right? Let's you want to raise at that spot. Now I want to show you something. I want to show you something which is very much important. This is the buy setup which I gave you guys on the group I think 2 years 30 last week. All right, so we have this break or structure to the upside, right? So this is a break or structure to the upside. We also have this other block which is sitting here. All right, so I want price to return back to this other block. Yeah, price really return back to that other block and dish me a little move before you know I hit SF. All right, so I hit SF at this point. Sometimes you really need to be understanding the markets you are working at. So any pair you are trading, you really need to understand the market because it's very much necessary. All right. Can you see? So loss was I gave my stop loss. I think my stop loss was at this point. So I need price to the top up. Now you see how price take me out, right? So you had to put my liquidity, you had to put my stop loss, right? Initially I could like say here or my price thing work it out. So this is the same thing which is happening at this point. So price reacted from fair value gap right here and move to the upside. Now once you say you want to like take trade from here, can you see how the movement is, right? Where to put your stop loss is very necessary. Price will be targeting to take out liquidity here, all right? Price will be targeting to take out liquidity at this point, to take out trend line liquidity. Now, I need you to note something. So we are not looking for a buy at this point. So I'm not going to give you any setup for a buy at this point. So I'm not going to give you any setup for a buy at this point, all right? Because here I look here as inducement so that price to take out liquidity for and move to a direction, right? Once if we also look, we see that price give us a break or structure to the downside, right? We have this break or structure to the downside. We can have another break or structure to the downside. Price clear at this other block. We'll be looking for a sell. We'll be looking for a sell to sell at this spot. Then your TP should be around this corner, right? So you're looking for a sell to sell, but please allow the market to give you the direction. So me personally, I'm more comfortable to look for a buyer at this spot. So I need market to return back to this other block and teach me that buy to the upside. All right. So here is going to be my trend line liquidity. This other block is called inducement order block. All right. This is inducement order block. So to one inducement order block, you are going to say, I always explain this in my mentorship program because necessary, right? Can you see how price lift us this fall? I'm not comfortable here. Inducement order block, trend line liquidity to take out. Now, since we have this move, is going to like once we have an break or structure to the downside, here is going to be market structure shift. We have a break or structure to the downside. On then you find the origin and move price to the downside. All right, so this is just the take. No setup on year 30 unless you want to look for a buy. For me, this is the perfect place to look for a buy. Look for a buy at this spot is very necessary. All right, here is the perfect place to look for a buy at this spot. So our stop loss is going to be just one look for a buy. Our stop loss is going to be at a swing low. Just reduce it a little bit. This here, just reduce it. So we need price to return back. If price return back, we take a buy to the upside. Take a buy to the upside. So it's very much necessary. All right. This is just my take pattern to this pair. We need a buy to the upside. Inducement order block, trend line liquidity. We need price to tap us from this order block and this shots that buy to the upside. One thing I really need you to understand, this pertaining to my strategy is this, all right? Sometimes it's hard for you to catch a trade, but once you have a trade, you can nurture that trade and it's going to like give you money more than people that will just enter. No, my strategy, I love my strategy. Can you see if we cut this buy at this spot, the market can move rally to the upside. We'll be nurturing our trade and take profits at the point of reversal. That is one thing I use along the strategy. All right. I'm going to analyze. Should I analyze US oil or USD JPY? Which one? Choose. US oil or USD JPY?
USD JPY.
All right. All right. Let's know what the market is like. Say, let's move to the 1 day time frame. All right, so let's move to the 1 day time frame. First, we have this break or structure to the upside. So we're having a retracement to the downside at this spot. So this is called the order block that causes the break of structure. But initially, all these consolidation candle are the order block that causes this break of structure to the upside. But we prefer to choose the last consolidation candle before the move to the upside. All right. Let's move to our forward time frame. All right, in our forward time frame, let's look at the recent break of structure to the upside, which order blocking with prices anti-like reacting. All right, so it's very much necessary. So this is our forward time frame. We have this break or structure to the upside. Since we have this break of structure to the upside, price already reacted from this price reacted from this order block. So we need to like go to the 2 hours time frame. All right, in the 2 hour time frame, we also have price also reacted from the order block at this point. All right, so let's move to our 1 hour time frame. All right, in our 1 hour time frame, price also reacted. It's I already need us to do something which is very but before that, I'll go to the 15 minutes. So let's switch to the 15 minutes, then we'll look what the market is like currently, like say. All right, so we have this break or structure to the price starting from the order block that causes this break or structure at this point, right? So since price starting from the order block that causes the break or structure to the upside. All right, so let's move to our 30-minute time frame. All right, so our 30-minute time frame also have price also currently reacting from this order block at this point. All right, and 15-minute time frame. All right, 15-minute time frame price is also reacting. Price reacted from the all right, but before the move, we have this we have this market structure shift, right? So we have this market structure shifts to the downside, or let me just say a breakout structure to the downside. We now breakout structure to the downside, and just leave it as market structure shifts. All right, breakout structure. We also have this market structure shift. All right, let's zoom. All right, so we have, if we want to say where's the other block that causes this move, right? So we have if we could read, let me remove this structure. We have break to it. So price neglected to tap this other block. So we have this what the price neglected to tap this other block. So we also have this structure to tap that other block. So all right, can you see how the market is going to understand? This other block is going to be it. So our other block is going to be other block to be right. Is going to be we need price to come back. It's called price to back. We need price to return back. We need price to return back and give us a sell at the spot. And then give us a sell. Right? So liquidity, stop loss is going to be here. Right? Stop loss is going to be here. New price, this is liquidity. Price to take out liquidity at export. New price to return back, give us a sell to the downside. Alright, so technical analysis is very simple, but it all depends on you. Just psychology is all right. So new price to return back to the give us more to the downside. Alright, this is what we'll be looking at USD JPY.
All right, sir.
Right. So from here, we need a sell from here. We need the price to return back. Liquidity spotted. We need price to return back from here and teach us a sell move to the downside. Sell to the downside. Now, can you see the risk reward ratio, right? This trade is 1 to risk reward ratio. And you see how the risk reward ratio is. So you're going to have some funds. That's the reason I love my strategy, right? With patience, everything, patience beats the market, right? So you don't need to beat the market. Now we need a sell from here. Price return back. We have a sell to the downside. We have this market structure shifts. Market structure shifts, a breakout structure to the downside. We also have another breakout structure to the downside. Price return back from here. We catch a sell to the downside. All right. So this is where I'm going to stop for today. If you want to join the
Sir,
trade,
please, I have a question.
all right. What is
Yeah,
it, please?
so I have this one issue. Like, okay, fine, I get a trade, or I'm in a trade already, but sometimes I usually find it difficult, like, based on your own experience, like, do you think trailing stop is the best, or you just set your stop loss, your TP, and let the trade run? Because sometimes when I decide to use trailing stop, the market might decide to make up and down movement, clearing my stop loss. So sometimes I decide to just let my SL be. So whatever movement it makes, even if you hit the SL, I decide to let go. So I want to know, should we just leave the SL or use trailing stop?
All right, I understand what you're saying. It's very necessary to take your trade at break even, right? So it's very necessary to take your trade at break even. But you need to understand something, all right? You need to understand something. Let me say, for instance, the market has started us in from here, right? So let me say the market is currently like moving to the downside, moving to the downside, moving to the downside at this point. Let me say at this spot right now, can you see this spot? the market. This is a recent market movement at this spot. Visible.
Yes, sir, it's visible now. You can see.
Right. So this is the moment. Let me say the market is moving here after hitting your. Now the best thing you really need to do is to just take it to break even. Like your stop loss is here, right? Take it to break even. Reduce your stop loss to break even to your entry price. Just give a little gap away from your entry price. From here, this is a break even, right? So this is a break even. So sometimes it will be very hard for price to return back to this move, to return back here, all right? It's very hard. Sometimes it all depends on how the market is moving. So it depends on how the market moves. But instead of you to be trained, let me say you trade your stop loss to from here. No, if the market is moving up and down, it's going to like take out your stop loss, right? It's like take out your stop loss. Just move it to break even. Just move it. Just give a little space from your entry price. Give a little space to your entry price. All right. You understand? Is it well understood?
Yes, sir, I
Right.
understand now.
All right. So just do it. It is going to like help you. Going to help you. All right. So I wish you all good trading week. Also, as you are trading, please trade with caution. Anything can happen to the market. Do not allow anybody to promise you anything. Like what they are giving is all right. Anything can happen to the market, but all what I'm happy is that you are moving with direction. You are moving with confidence. Anything could happen to the market. All right. Your analysis is good. So trust your analysis. Whenever you take a trade, trust your analysis, please. Trust your analysis. Your analysis is right. Your analysis is right. So I'm going to stop here at spot. So wish you all good trading week. Shalom.